The following is a sponsored program on WBT.
Investment advice provided on the following program is on an individual basis. Listeners should not consider today's discussion as a recommendation for any investment and should carefully evaluate before investing. This is Your Real Estate Today on News Talk 1110 WBT.
Hello, friends, and welcome to the show Your Real Estate Today. I am so excited to be spending Saturday afternoon with you. I'm Paul Jamison, your host. If you're a first-time listener, welcome. If you're a long-time listener, welcome back. We have got a loaded show today. I am going to tell you what, we are going to cover you with information about your home, about real estate, about our current market, about mortgages. We have so much today. When Sandy, who's the guest this week, Sandy Dickinson with Summit Funding, when we're talking about what we're going to talk about today, I'm like, turn to page like 50 of what we're going to talk about today. And now I'm being a little bit facetious, but it took two staples to get this paper to hold together. It's a tree or three. But anyway, we've got a lot of information to share. I hope we get it to you today. So wherever you are, I hope that you are safe, having a great Saturday and enjoying it. I'm here with Sandy Dickinson with Summit Funding. Welcome back, Sandy.
Thank you. It's good to be here.
So other than the mortgage update today, I've got you for the whole show today, and we've got some really cool stuff, don't we?
Yes, we do.
All right, so
Exciting stuff.
After the first set, what we're going to do is we're going to talk about, Sandy's going to give you the normal mortgage update because I know you all count on that to see where rates are, packages are, and what the trends are. Then she's going to tell you why mortgage lenders, the need for documentation can be frustrating and why they need it because it's important. And then she's going to talk about mortgages past, present, and future. So we got a lot to go there, but here's what I'm going to do. I'm going to do what I always do. I'm going to tell you what I learned this week. You're going to love this. All right. First, I got the stat this week of the average first-time home buyer's median age. Bet you don't know TJ. TJ's our producer. I bet you don't know the median age of the first-time home buyer. 33 years old. Man. So, TJ, you're 33 years old. TJ, it's time to buy a house, dude. The alarm's going off. All right. It used to be, I think, Sandy, am I right? I think it used to be like 28. Now it's 33.
I definitely think it was younger, yeah. It seems to, that thing's moved.
Why is it 33? Let me tell you. Due to lack of inventory, number one. Their credit, number two, lack of affordable housing and stronger lender restrictions, and college debt. Ooh. So there's the quadfecta. There are 4 variables that are making you wait till later, but that's okay. It's still the American dream and a great way to invest and and build wealth. All right, next. It's not related to real estate, but it I was reading the thing and I thought I would share it just because it's been interesting. No, none of us have been to a party for a while, right? You've been to one, Sandy? You've been out partying in the crowds?
No, I haven't actually recently.
Okay, so get this. 36% of the people surveyed admitted they double-dip their snacks. 47% say they have talked with their mouth full. 28% say they have touched food and put it back. And 25% say they have coughed or sneezed on the food. Oh,
makes me glad I haven't been to a party.
My. Oh, my. It's like, ew, EWW. Do you believe that? I'm surprised Brett Jensen didn't bring that out. You know, that's something he would do, don't you think? Or Winterville, either one of them.
Mm-hmm.
Tell you, they're going to copy that, I know. All right, so if you want to retire and you can save $750,000, You can live in Akron, Ohio for 20 years and 8 months, Brownsville, Texas for 20 years and 2 months, Cleveland, Ohio for 19 years and 7 months, Toledo, Ohio for 19 years and 4 months, Buffalo, New York for 18 years and 5 months, Evansville, Indiana for 18 years and 2 months, and San Diego, California for a week.
Right.
I made up that last one. So, interesting if you want to retire. All right? All right. So next, pulling your credit. Now, Sandy and I had a little sidebar about this before the show today, pulling your credit. Why am I talking about pulling your credit? Well, it appears from a personal experience situation that some credit card companies, when you sign up with them, you're also signing a document allowing them to continually pull your credit. I noticed on my credit report, which I watch on an ongoing basis, that my credit was pulled again. And I've hesitated to lock my credit, but I think this is going to be the excuse to do it. Can companies actually have you sign something where they can go in and randomly go, you know what, we got this new offering out there. Let's pull the credit of all our credit card holders and see who we want to solicit to based on what their credit score is according to our profile written by our management company. What do you think?
Not in my world, but maybe in consumer credit. I don't know. We ask every time before we pull.
Yeah, I mean, same thing in property management, right? I can't pull somebody's credit without their permission.
Right.
I mean, come on. Just check your credit report. I'd be interested to know if anybody else out there besides me is having a bank, not to be named, but it has a wagon and some horses, that if they're allowed to pull my credit on an annual basis, is that legal without me authorizing them each time? And I must have signed a document for the credit card that I have allowing them to do that because I don't have any other business with those people. Interesting. Wasn't that a need to ponder kind of situation? Okay.
Yes.
All right. So I don't know if we'll get through all these before the break, but I wanted to think of some pandemic positives. Easy for you to say. Pandemic positives. And what triggered this was Sunday, the pastor talked about 1 Thessalonians 5, verse 18, and it is as follows. Give thanks in all circumstances, for this is God's will for you in Christ Jesus. And his point was, with everything that's going on right now, it's hard to give thanks over stuff, right? It's easier to look at what's going on in our country and go, man, or our city, or our community, or our neighborhood, and go, whew, it's hard to say grace over that. So I decided to come up with a list. Here are some. And if I run out of time, just give me the signal and we'll pick them up later. 1, many people are spending more time with family. Obviously, this is good. Number 2, savings have gone up. There's less outside discretionary spending. People are eating out less. They're actually saving money, and they're eating healthier. Real estate. Many people are now saying, well, if we got to stay at home, we need a bigger house. And they're buying bigger houses and larger homes. And pools, which used to be a no-no in a lot of cases, pools are the most popular thing. You got a pool, you're going to sell your house because people want to be able to entertain and control their own environment. Secondary market homes within 300 to 500 miles radius of where people live, the market is going bananas. Hilton Head, Beaufort, South Carolina, Charleston, craziness for the secondary market right now. They're seeing real estate markets like you've never seen before. And, Sandy will comment after the break, purchases have gone up just a little. All right, so after the break, we'll finish up the positives and we'll jump in to talking about mortgages. I'm with Sandy Dickinson with Summit Funding. I'm Paul Jamison with the Jamison family of companies. We'll be right back to show your real estate today. Stay right. Welcome back to Show Your Real Estate Today. We're jamming and we're talking real estate. I'm Paul Jamison, your host, owner of the Jamison family of companies. That's Realty, Property Management, and Property Investments. Here with my dear friend and lender partner, Sandy Dickinson with Summit Funding. Hey, Sandy, welcome back. We are here. We're going to finish up our pandemic positives. More people spending family time. Savings have gone up. Real estates, people are buying larger homes. Secondary market is good. The rental market is up like crazy. Vacation rentals. People are getting out, and they're moving out of apartments and wanting to be in houses in less dense space. That's a positive. Purchases are up just a little, huh, Sandy, in the last few months?
Oh, yeah. I was telling you, it's like Disneyland in the mortgage business right now.
Purchases are up in this time frame. I think they cited in these last couple of months like about 80%. The applications for purchase mortgage. That's a nutty number. Seems crazy. Also, some pandemic positives. Rates where they are. Predictions that the market will still remain stronger even after the pandemic and after the election due to the pent-up demand. So they have stated it isn't going to stop in November. It's going to keep going. I like that news, by the way. That was from Lawrence Yu of the North Carolina Real Estate Board. He is the chief economist. Also, we're learning new ways to communicate, right? We're doing Zoom. Like right now, if you go to the Jamison Realty YouTube channel, you can see Sandy and I and our pictures and us on Zoom. And that's another great way to see us in the shows and all the gestures and the hand waving and funny faces and all the sidebar stuff that we're doing when we're not actually on the air. It's kind of fun to watch. A lot of people have been going there to catch up on old shows and watch the new ones. It also makes you appreciate relationships more. That's a positive from the pandemic, I think. It keeps your kids away longer. Oh, did I say that out loud? Oh, sorry. Never mind. That was a keeps them away from home longer if they live outside. Sorry, I didn't mean that one. It keeps you out of your fridge. Also, I'm reading more and watching less news. I can't stand to watch the news. It makes me crazy. So I quit watching, and I just had to do that. So anyway. All right, what do you think of those, Sandy?
I thought those were good ones.
Pretty good, huh?
Good.
All right.
Mm-hmm.
Okay, so let's talk a little bit about first getting your mortgage update and then why is documentation so frustrating? So what's going on right now in the current mortgage world?
Well, rates are amazing, and they seem to be staying very steady. There's not a lot of indication that they're going to go up. So we are basically getting them through the origination process and an approval process quicker, and then we're locking the loans because the shorter-term locks are way better than the longer-term locks. Mm-hmm. So we're doing that, and anyway, it's just expected to continue. So I don't have a lot of crazy news about it other than they're steady, and you have plenty of time to get into refi or purchase. If you plan to, the lenders are inundated, so it's not going to be as fast as it was. So for realtors, I would say write your contracts out more. And for people refinancing, don't expect it to happen overnight because the market's getting a little tired. Like the appraisers are taking quite a while, the attorneys are taking longer, and it's just more of a stressed process. So I would say just, go with the flow. Don't worry about it, and everything will get done.
The refi process, you brought up a good point. So that's about a 45 to 60-day window, you think?
Yes, I think that's a good estimate because we want to hit the purchase date. So our purchases are much quicker. They're under 30 days, 2-day underwrites. And so the refis are going to be a little bit longer because they're not urgent. And we do have some time because the rates are steady.
Okay. All right. So Sandy, let's talk a little bit about documentation.
Okay.
Documentation has been a point of contention in mortgages for a long time.
Yes, it has. And the points change constantly, but right now there are some things that people just are frustrated with and they don't understand. So I wanted to clarify some of that. For instance, people send us screenshots and pictures, and underwriters don't like those. And investors don't like those. And a lot of the reasons is because, number one, we don't get all the information we need, like their name. We can't sometimes identify the account with the person. Sometimes we don't get all the pages that way. And because the other reason is that they can be manipulated on the Apple iPhone they can, and in some cases on the computer, they're not time stamped, so they can be manipulated and sent over, and we just don't take them. We just don't take them. So we have to have URLs and all kinds of stuff. So that's very frustrating for people because they're like, we already sent you that, but they didn't send it in the right format, so we can't take those.
Well, that stinks. Yeah, so a selfie with my bank statements isn't going to work, huh?
Probably not.
All right, what else?
We have to have every page of the document. So bank statements, even if there's blank pages, if it says 1 through 5, we have to have all 5. People don't understand that either because some of those don't have pertinent information on them. But for underwriting purposes, they're always concerned that there's going to be something on them that they missed, so they want all the pages. Similarly, if you have a child support or separation agreement, and you might think that all we need to see is how much obligation there is with alimony or child support, we still have to have all the pages of that because there could be contingent liabilities in there that we need to know about. Even if they're 40-page tax returns, we need all the pages of the tax returns and the statements. We can't just take the first 2 or the ones that you guys want to give us, like a Schedule C. We have to have all the pages because there could be something in there that you don't think is important, but we think is important. And we don't want to miss out on anything. We're kind of like that. So,
All right. What about deposits?
Keep that in mind. Deposits, yes, we have to. That not just explain deposits, but we have large deposits. We have to show the source of those deposits. So if you have one that's, we had one yesterday that he put money in from a Fidelity account. Well, he kept saying, well, it says it came from the Fidelity account. That's fine, but I have to have the statements from the Fidelity account because I have to see that it was yours, and I have to see that that's where the money came out of, because we have to show that it wasn't borrowed and that it wasn't cash that came from some crazy place, because we do report to banks or to the Fed, and we have to watch for money laundering and stuff like that. So we have to document like crazy, and I know it's frustrating. It's frustrating for us too to have to go back 2 or 3 times. We can't take this; doesn't have your name on it. We can't tell that this is your account because it's a transaction history, not a PDF. I mean, it happens a lot, and people get frustrated, and I know why.
Yeah, I mean, the interesting thing about the money and the money sourcing, I try to explain that to clients too. It has to have a source and that you can trace. Yeah. Was it always like this?
Also, it hasn't always been like this. Back in the early 2000s, it wasn't like this. But then again, we did have a mortgage meltdown.
Yeah.
So I don't know. We do have to explain all inquiries, and we look at reoccurring amounts, withdrawals or things going out of the account in case there's a debt that you didn't tell us about that you're obligated on that didn't show up on the credit report. So we look at the stuff that comes over.
Yeah, I mean, it's interesting because I think you had said, what was it? It was like deposits over $2,000 or $2,500 or something?
It depends on the type of loan. For conventional, if the deposit's over like 50% of your gross income, they're crazy rules. Then yes, they have to verify it. On FHA, it's more like a percentage of the sale price.
Yeah, okay.
I don't know. It's all different rules depending on the type of loan. But if there's a large deposit, you're probably going to have to source it and explain it.
All right. Well, we'll be right back with more with Sandy Dickinson and myself, Paul Jamison. We're going to talk more about mortgage documentation and then mortgages past, present, and future. The show, Your Real Estate Today. Thanks for spending your Saturday with us. We'll be right back on News Talk 1110 99.3 WBT. Don't go anywhere. Hello, friends. Welcome back to the show, Your Real Estate Today. I'm Paul Jamison, your host here with Jamison Realty, Jamison Property Management, and Jamison Property Investments. Spending Saturday with you talking about your home, talking about real estate, talking about mortgages, talking about positives, talking about good things, and things to learn related to your mortgage, related to your home. Thanks for spending time with us. If you're a first-time listener, we welcome you. The show, Your Real Estate Today, has been around for a long, long time, and we're excited to share information about things you may know or may not know that could be helpful to you, whether you're buying, selling, or investing. All right. In real estate, that is. All right. Sandy Dickinson with Summit Funding. Before the break, we talked about mortgage documentation, why we need it, why she needs it, why it's there. We talked about, screenshots don't work, right, Sandy? We talked about you got to send in all the pages. We talked about large deposits and recurring debt and documenting that to the nth degree of trail. She's laughing at me now. Of course, if you go on Zoom, you can see her laughing and me waving my hands in frantic places. Other than the producer, you can watch us do that. So next you said you got to verify that your taxes are paid. Well, why?
Yes,
I told you it's in the mail.
Yeah. Yes, we have to know that your tax liability is paid because there could be a installment contract that you pay monthly. Then we would have to count that in your debt ratio, or it could become a lien. So we have to make sure that people are in good shape on their tax liabilities, and that we have proof that they're paid.
Yes, I think that is important. All right. And then what about how long is our documents good for? I know an appraisal is good for a day. How long are the documents?
Appraisals are good for 4 months, as are credit reports. So if I pull your credit for a pre-application, we don't have to pull it again for unless you take more than 4 months to find a house. But the other documentation, which used to be good for just the same amount of time, is now only good for 60 days. So bank statements have to be within 60 days. Verification of employment has to be within 60 days. And we have to get proof of your current income all the way up to the day of closing. So that's like real-time stuff, because we have to make sure with COVID, people are losing their jobs and getting furloughed. So we have to make sure you're still working, and not that you're just still working, but that your pay hasn't been cut, so that we're using the correct amount to get you qualified.
Yeah.
So if there's changes, you have to let us know so we can try to circumvent issues right at closing.
Right. And to clarify the appraisal comment I made at the beginning, technically an appraisal is only good for, in the real estate world, related to value, for 1 day. So that's the value of the home on that day. But in Sandy's world, that number is good for 4 months, you said, Sandy?
4 months.
4 months. That's good for 4 months. So just to clarify, we're saying different things for different reasons. All right. So why won't you take a PDF from me?
I will take a PDF. I want a PDF. What I don't want is a transaction history, because that won't have your name on it, and I won't know that it's yours.
Okay. All right. She'll take a PDF, TJ. Thank goodness. Okay.
We have a lot of rules.
You think? So why do you need P&Ls from the companies or self-employed?
Yeah, so some people don't do them very often, but we do need profit and losses to make sure that you're still on track with what you made the previous years. If we see a decline, especially now with all the craziness going on, we see a decline in income, that could affect your qualification.
If you have a decline in income from, say, 2018 to 2019 or 2019 to 2020 year to date, do you go with the lower of the two?
Yeah, so we get an explanation, and as long as it doesn't appear that the company's in trouble, we will go with the lower of the. We'll go with the most recent, which would be the lower of the two.
Right. I guess because some companies have a one-time event, right, that could be giant.
Right, or there could be, you could have changed something, some way that you report your income,
right.
Things happen, and there's reasons, or it's seasonal. And say we're at the first quarter of the year, and the March P&L doesn't reflect an annual P&L because your business doesn't really start until the middle of the year. Things like that make sense. So we can always circumvent issues with that, but we have to know that the business is still in good standing.
Right. This is not something we discussed, but a question for you, Sandy. A lot of businesses have taken, and a lot of small businesses have taken PPP money.
Right.
Does that affect anything related to?
Yes. So if we see a big deposit that's a PPP or a small business loan, we have to know whether that's going to turn into a debt, like if a monthly debt, and that's going to affect the P&L and the performance. If it affects the performance of the business, we just have to make sure the operation of the business is sound. If it's a grant, it's not an issue because you don't have to pay that back. But if there's going to be a monthly payment, then we do need to know that.
Right, because right now, I don't think any business knows exactly what it is because they haven't brought out all the terms and how to be able to apply for the grant. It's slowly coming out and still changing, I understand. So I guess now...
Yeah, everyone's different.
Yeah,
right.
Exactly.
So if we see it, then we have to get whatever documentation that went along with it.
Right. And the current documentation until the grants are issued is shown as a loan.
Right.
Right.
Exactly.
Yep. Okay. So why do we have to explain inquiries and late payments?
Well, we have to explain inquiries because we need to know what they were for and if they resulted in any new debt so that there's not any undisclosed debt, and that our debt will be correct. Mm-hmm. And late payments, you don't always have to explain late payments, but if there was a significant event like a bankruptcy, a foreclosure, we want to know why that happened and that it just wasn't due to, I just, racked up a bunch of debt because I was irresponsible. What we're looking for is a catastrophic event that was one time that's not likely to occur again. Maybe somebody got laid off, somebody got sick, something happened that caused, like a hurricane that caused your house to need a lot of repair. There's things that are likely not related to things that you could have controlled. So if it's beyond your control, if it's one time, then it's no big deal. If there are a lot of chronic late, like over year after year, then that's a concern because underwriters will perceive that you're not motivated to pay your debts, or if you have a little bump in the road that it throws you and you can't make your payments. That's the kind of thing they look for.
Right. Well, I guess that also brings up 2 points. One is, the world of forbearance. And number two, the world of small little medical bills that no one knows about that are stuck on your credit for like $25. I'm not going to, don't make me go down that path again. They all of a sudden start robo-dialing on you. I had one, I think, for like $8.16. I don't know what it was for. The point is a lot of times they put them on there and you don't know.
That's right, and it can affect your score by 100 points. something very recent can affect it, and you think if you pay it that your score will go up. It's not always the case. You need to get them removed. If it wasn't, if it's not valid, if they didn't notify you so that you could pay it, then you really need to argue those off of your credit report, because it makes a huge difference with your score, and the score makes a difference with your rate and the type of loan that you can get.
Right. And forbearance also, we've got about 20 seconds left, is probably a bigger subject, but forbearance can also affect.
Yes, only use it if you need it.
Yeah.
Don't use it if you don't need it.
Yeah, that's really good advice, and they should carry that. Well, after the break, we're going to talk about mortgages past, present, and future, and we're going to go all the way from look back to predict. So that'll be kind of fun. The show, Your Real Estate Today, Paul Jamison, your host with the Jamison Companies, as well as Sandy Dickinson with Summit Funding. Enjoying a Saturday afternoon with you. Thanks so much for being with us. We'll be right back. The show, Your Real Estate Today, here on News Talk 1110 and 99.3 WBT. Welcome back. The show, Your Real Estate Today. Man, the time just is flying through the show. If you're a first-time listener, like I said earlier, or a long-time listener, we love having you. Thank you for spending your time with us on a Saturday afternoon. We hope you're safe and well and enjoying your Saturday. I'm Paul Jamison, your host. I own Jamison Companies. So it's Realty, Property Management, and Property Investment. Here with a lending partner with us, Sandy Dickinson with Summit Funding. Sandy has been working with me for a long time and takes really great care of our clients, whether you're an investor, whether you're looking to refi or purchase. Sandy's on it, and her team is top-notch, 5-star, awesome. Just check out her reviews. They are fantastic. All right? Sandy, we've done the mortgage update. We've done the documents. Now let's go. What did you call it? The Summit Sandy Dickinson?
I called it Dickinson, a mortgage carol.
Yeah. So we're going to explore the past, present, and future of mortgage. So let's talk about the past, Sandy. What was a mortgage like in the past?
Back in the olden days, well, even before I was born, you found some notes that they never had terms greater than 3 or 5 years. So I thought that was interesting. More recently, but not too recently, they didn't have mortgages over 80%. So they've had to put a lot more money down when all this started. Mm-hmm. They didn't have mortgage insurance, so they didn't have the longer terms. They didn't have the low down payments, and so not as many people could buy houses. Mm. And then in one day, an insurance person came along and said that they would provide insurance if the lenders would increase their risk on it and have less down payment, and that happened. So it didn't happen all at once. I think first they probably could do 85%, then 90%, then 95%, and then 97%. Now we go all the way up to 97% with mortgage insurance.
Right, right. That's awesome. And then you had made a note, too. At one point, there were like 40-year mortgages or something. Yeah,
so we had the 15, then they went to 30, then we even had a 40-year mortgage. That one didn't last that long. We had it for a few years, and now it's dropped back to 30. I guess the metric is it's safer to have a 30-year mortgage.
I could sign up for a 30-year mortgage right now. I guarantee you it won't make it all the way through, but it'd be all right.
I have a lot of 80-year-olds ask me if I'll give them a 30-year mortgage, and we do.
What?
Yeah, we do.
Seriously?
That's age discrimination if we don't. We'll give a 90-year-old or a 100-year-old a 30-year mortgage.
There you go. Well, who knows? If you eat right and
right.
And exercise, who knows? You could do it. And drink that beet juice they advertise on TV. I think that'll do it.
Mm-hmm.
That'll
do it.
Okay. So, from the time you started in the business, Sandy, to now, what were some of the changes that you experienced, other than the rates going down significantly?
Right. Well, a lot of the changes are that when I started, we used to type out all of our documents, and we used to snail mail all our verifications. We didn't have credit scores. We never, that came later. We didn't have automated underwriting.
Oh, my gosh.
I know. It used to take at least 2 months to do a mortgage because we would have to mail everything out and then get it back. We'd have to order the credit report and wait for it to be mailed to us. So, yeah, lots of changes since I started. We used to not have to get title insurance, commitments before we closed. We did what they called fast titles or fast closings, and so we just trusted that the attorney would take care of making sure we had clear title. Now we have to review everything. We didn't have to record. We didn't have to. What was it? We didn't have to record before we could disperse a loan in North Carolina years ago.
Wow.
Until the attorney started running away with the money.
Oh my gosh. Not too good.
Not good. So we had to tighten up. So
orange jumpsuit. Orange jumpsuit kind of stuff.
Hey, back in the early 2000s, I used to wear a button that said "Friends didn't let friends do fixed rate mortgages."
Oh my gosh, there were all kinds of products back then. I remember you could do all kinds of stuff.
The best of both worlds arm, the cash flow arm, the two-step, the balloon. There was all kinds of stuff back then that we could do.
Yeah. So what are some of the constants? What are some of the things that you, year over year, time over time, well, except for if it didn't exist, are constants?
I would say constant is you have to have enough money to close. Your debt ratios can't be too crazy. We still have those manual underwrite debt ratios, and they like to stick to them pretty well. You have to have clear title. The type of property makes a difference.
Right.
It needs to be a marketable property. That's why things like geodesic homes and log homes are a little bit tougher. Manufactured homes are sometimes a little bit tougher to finance. Things that are out of the ordinary are not at least perceived as marketable as something that's very cookie cutter. So now that we sell to the secondary market, you have to meet a lot of the same requirements, and there's not as much leeway on what you can do.
Right. And you kind of summarized today, kind of what's going on with the industry. Are there any things that stand out about the present of the mortgage market that you see, which is contradictory to maybe what's to come and what's from the past?
Well, I think that we'll see that jumbo loans are going to get better and more competitive than they are right now, because as the risk goes down, those will come back. We'll get bank statement programs back. We have some that just are not as lenient as they used to be. Also equity lines. So now a lot of the banks have yanked those down to 80% collective loan to value. We'll probably see them go back to 90 when the fear is over, and we know what this impact of all this unemployment is going to be. Things will definitely loosen a little bit again.
Right. Well, wanting to talk about this, I guess, is the future of this, and of course, you obviously can't predict the future of your industry, yet alone whether we'll be wearing a mask between now and perpetuity. Tell me what you think. I pulled some data on some kind of continuous workout mortgages and other creative mortgage things. What do you think about what's coming, Sandy, with all the forbearances and the future of mortgage, even with electronics?
Well, I think that that the banks are going to definitely work with people more than they did back in the 2000 crisis, because they don't want to see the amount of foreclosures and short sales that we had back then. So yes, they'll probably do more and more modifications. I don't know if I don't know if they'll come out with a product that's just going to be continuously changing. That looks too much like that cash flow arm that people didn't understand. People have to understand what they're getting into. Otherwise, things get ugly.
Yeah.
So I would say they have to keep it simple. But maybe there will be an easier process to get that to happen.
Well, Sandy, too, the amount of equity they have in their home right now is in a very different place in a shrinking market than it was back in '08. So there's equity there that they can play with, right?
Right. So that does leave them with more options.
Yeah.
And I think we will start doing more online closings. I mean, I guess they're doing it, but I guess that'll more and more of that.
I think we'll see the e-closings, too. You'll probably be doing it beginning to end here one of these days. All right. Well, thank you, Sandy. If people want to talk to you, how do they get you?
They can call my mobile at 704-577-0144.
Thank you very much, Sandy, for today. It's great information. We always run out of time before we finish,
I know. That's a good thing.
Yeah. Well, if you want to talk to me, if you're interested in buying, selling, or investing, call us at 846-DONE, 846-3663, or on the web at myjamisonhomes.com. Take care, friends. God bless. Stay positive, and enjoy your Saturday. We'll be with you next week to show you real estate today here on News Talk 1110 and 99.3. God bless you.